The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the December 29th magnificent Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes. Who knows, we should always be pioneers of our future versus prisoners of our past. And we should always remember that life happens for us, not to us. But we can make that one little shift. That one little shift in words, folks, that means we can find the gift in every set of circumstances that the universe decides to throw at us. Hope everyone out there had a fantastic weekend. Hopefully you got some rest, got all the presents that you wanted, maybe did some shopping, watched a bunch of football, and there are a lot of football games on. In fact, they're back on again today at, I believe, 12 noon or so out there. So that is a beautiful thing. So hopefully everybody out there is doing well. I think weather-wise, things were pretty good across the country out there. Look, I am grateful for your presence here today. I am here to serve you. That means I'd love to hear from you. So give me a call at 877-927-6648. Internationally, you can reach out to us at 727-445-1044. Of course, this is Magical Monday. This is TFNN. I'm Steve Rhodes. Welcome to the show. Right now, we got Dow Futures. They're trading up about 40 points, trading out at 17,971. S&P Futures down 2.5, trading out at 2,081.75. NASDAQ off 4 points, trading at 43.06. King Dollar back 10 pennies, trading out at $90.20 out here. Goldilocks back $3 at $11.92. Silver off 3 pennies at $16.11. Light sweet crude is up 67 cents. That's trading out at 55.41. Natural gas up 6 pennies right now. We'll take a look at all of those and anything else that you would like in the pre-market out here. Let's see, we've got Juno Therapeutics. She closed out at 48.73. I tell you what it's trading at. Well, I will. I'll just have to switch pages out here because apparently I don't have that other tab. It's trading out at $51, so it's a nice couple dollar move here this morning. Looks like this had a big day on Friday out there. You got Manitowoc MTW that closed at about $21. It's trading at 23 right now, so that's having a nice move. Gilead Sciences that closed at 93.79. That's up almost $2, trading at 95.58. Gilead's going to run into a little bit of resistance at the top of its gap from December 22nd. That's at about 98.07. She's traded 95.55. GoPro trading to the downside out here. I don't think it's a big deal. It closed at $69 and change, trading out at 67.80. All right, so let's go begin the movie. The movie, that's, yeah. In fact, hey, that's what we do out here. We just watch movies, right? We're just watching the movies of the markets. But let's go take a look at the markets. I'll only be with you for the first hour today. A little bit under the weather. And so it's going to take all of my energy, I too mean all my energy, just simply to muster on through this first hour. So let's go take a look at what's going on inside of the futures market. Let's go take a look at the ES Mini out here. So let me switch over to take a look at a short-term time frame out here. So we're trading at 2,082. A key level to be watching today, 2,081.25. At this stage here, we've seen price move below that. But if we do see it close below, if we do see the market, let's say during the 9:30 to 10 o'clock time frame, get below 2,081.25. What we're likely seeing set up here is some form of an A to B equals CD to the downside. I'd give you a price projection on that A to B equals CD pattern. I've got the A and B. The question is, do we have the C point? Is the C the high of this bar here between 4 and 6 a.m., or is there some other retracement? But I would have to say you're looking somewhere around the 2069-ish type level as we move down, maybe 2066 only, and I do mean only, if as we come into that 10 o'clock, 10 a.m. time frame, we see a ES minutes trading below 2081.25. How's that for a bit of accuracy? Right now you're not. You're trading at 2081.75. We've got to go see how the market actually opens out here. And that's looking at an intraday move. would really be no big deal to the downside. If we take a look at the longer-term charts out here, let's go take a look at in fact, let's look at this. Let's look at the NASDAQ. We'll look at the NASDAQ, the S&P, and the Dow out here. So we know about the NASDAQ out here. It formed this top on November 28th. At that high out here, let me see, there was no A to B equals CD pattern, I don't believe, up there, was there? No, there was not. So it forms this top up here. The only real indication of anything was it got to a seventh and final wave of the Chapman wave to the upsides. We got that wave at G out there. Nice little bearish reversal signal, little bearish sash candle. Moves down out here. As far as where it moved down to, retracement-wise, and let me switch back and forth between a couple of things. Let me pull the NASDAQ up here. Here we go. And let's go take a look at the retracement now. So the retracement, I believe, is a 0.382 retracement from low to high out here. Yeah, 0.382 retracement. So we're talking about coming from the candle of October 16th, that low, to the high out here on November 28th. So it makes a 0.382 retracement. The exact number would have been 4,091.80. You get down to just a tad below that. So here's the deal. And I think there's really two keys in the marketplace out here. It's not the S&P, it's not the Dow. I think it's more the NASDAQ and the Russell 2000 where we get our better messages from. So the NASDAQ has been weaker than the ES Mini. It's been weaker than the Russell. It's been weaker than the Dow out here. What I mean by that is it has not been able to overtake its high back here from November 28th. So if the markets are going to motor on higher well beyond next week. All right, this is where I'm giving you the scenario. Now, the problem here is that we're going to be in a light trading session, all week out here. But nonetheless, let's just pay attention to the pattern, the potential pattern setup here. If, in fact, the NASDAQ can get above that 1128 level, do it with some conviction, some kind of volume, what it sets up is a huge A to B equals C to the upside. Now, that does not mean that it has to be a straight shot, but it does mean that it's a large A to B equals C to the upside. We haven't seen that here as of yet. What we have seen, if I come back and take a look at this chart out here, let me move back over. Since we've come off of that C point out here, that potential C point of an A to B equals C to the upside happens to also be a trough C on the way down out here. So we got multiples. And it's important that it's certainly important for me that I make sure that I use that accurate, because I got all these letters and things on here. We use A's and B's and C's and D's and so forth like that for so many different things. So I want to make sure that I'm referring to, that I'm giving you some clarity here. But if I'm not, just give me a call. I'll most certainly give you clarity. Now, what we can see here to the upside inside the daily chart for the NASDAQ is that if we don't see a higher high today, then you've seen a third move to the upside. That would set up probably a fourth move, right? That would be your A to B equals C to your Chapman wave D count out here. Maybe that takes place Tuesday. Maybe it takes place on Wednesday out there. Says that, okay, maybe especially if you can't take out the high out here, says, okay, maybe we're getting ready for just a bit of a push lower. Now, no A to B equals C dependence. That's what's going on inside the week link out here, right? And if we take a look at, something that's not as weak, I'd say the S&P futures out here. If we take a look at the S&P futures, they really have the same style pattern out here. And that it's made three counts to the upside out here. So, but again, trade 2081.25. That's really going to be the key to be focused on, to be paying attention to in the market. You trade below that, says that the market's going to should make some kind of pattern to the downside. Now, in the case of the Dow, super strong out here, through Friday, only its first wave to the upside. So is the Dow going to be the thing that is going to lead the market to the upside out here? Well, the only way, let's go take a look at this pattern out here. Let me see if I can switch over to my divergent pattern. So here's the problem inside the market, potential problem. And this is not about the Dow. This is just simply the general market. The top portion of my screen is the Euro-Japanese yen. Now, the Euro-Japanese yen is the currency pair that tracks the U.S. stock market. It's not the U.S. dollar index. It is the Euro-Japanese yen that tracks the market. This is the currency trade. And this is a terrific tool to help us identify potential problems there, potential roadblocks, potential detours. And in this case here, what we can see about the Euro-Japanese yen is that it's been making lower highs out here. at the same time that the S&P futures have been making higher highs. Now, the NASDAQ has not. But I've been using this chart to track the S&P futures against S&P more so than the NASDAQ over time. This chart here, I happen to show all three on there. And so it's always when the S&P is making higher highs and the Euro-Japanese yen is not, can't be used as a timing tool, but it is a great signal. It's like having your trip ticket and telling you there's a detour ahead. There's going to be an accident that is going to occur. And when you like to know that, well, this is a great tool. Now, back to the Dow. What I was going to look at in the Dow is my Dow GE chart, because I haven't looked at this here for a while. So what we can say with certainty, we see the Dow has been making higher highs, and General Electric has not. In fact, if I try to take a look at retracement levels, just on these are closing bars. These are not highs or anything. So it's just going to be an approximation. Yeah, all that the General Electric has done is basically made a 0.618 retracement from its high to its low out here. So if GE looks like here from a closing basis on Friday, it looks like it closed a little bit lower out here. If GE continues to motor down and the Dow continues to motor to the upside out here, we'll have another one of those divergent patterns. So I'd say, and this is for the Dow, it is one of the best patterns out here. Now, I don't think we have anything else of significance. If I take a look at this chart here, takes a look at the S&P 500 weighted versus the equal weighted ETF. The top portion is the ETF for the Guggenheim S&P 500. That's that ticker symbol RSP. It's been making higher highs just as the weighted SPY has. So that's actually bullish, not bearish there. When you see a divergence, when you see the equal weight veering off in a different direction, that tells you got an accident ahead. So in this case here, it says that any kind of retracement that we get, it could be a decent retracement, would be just something that would be normal. It would be where you'd want to be able to buy the dip. You just got to find the pattern that helps you to buy that dip. If we take a look at the equal weighted Qs ETF, that is QQEW, by the way, versus the weighted version, the QQQ out here. I'm just looking at so there is a slight divergence out here in the weighted. And it all depends on today. Let me just show you what that looks like here. So the Qs here gave us just maybe a bit of a signal. So let me put the arrow. As soon as I can grab it, we want our arrow. So you can see that from this close here, looks like on December 22nd to the close of Friday, we're just about at even Steven versus the close on December 22nd on the weighted versus Friday. We can see that was moving to the upside. Now, you need more than just one day, so you got to see how today plays out here. But it's a bit of an indication, So as I say, the NQ, the Qs, the Russell 2000, which we haven't talked about. I think those are the two areas that really give us a pretty decent indication as to what the next several weeks may look like out here. This is Steve Rhodes. This is TFNN. Right now, we've got the Dow futures. They're off 40 points straight out at 17,971. S&P down a couple of points out there. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Email coming in during that break asking me about natural gas. So let's go take a look at the March contract here for 2015. As we take a look at its pattern, the question was, is natural gas just getting a short bounce before going lower? So let's take a look at natural gas. Here's what we know as of right now as we take a look at the March contract. Number one, it looks like it's in the process of forming an A to B equals CD to the downside. Now, your one-to-one price projection is $2.92, so somewhere just around there. We're not down there yet. We've gotten close. Inside the March contract, got down to $3.13. $3 and a penny out here. We did that on Friday. So that pattern, hasn't completed yet. Well, here's the deal. When we take a look at price either moving either higher or lower. And this is where Japanese candlestick charting can come in and be so useful, is that prices will continue lower at a minimum until you see the first bullish reversal candle. Now, just because you see a candle that's green on my chart does not mean that it's a bullish candle. In fact, all it means is that price opened at the bottom of the body and closed up at the top of the body. That's all that it means. Also, just because you see a red candle on my chart, that doesn't mean that it's a bearish candle. Can be, but it doesn't mean that it is. It just means that price opened at the top of the body and closed at the bottom of the body. That's all that it means out there. Now, if we take a look just as an example here, you had natural gas. Price moved up. It 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 Okay, it was moving higher. This is coming off of the October 27th area. And you see it keeps moving higher. The very first time you got an actual bearish reversal signal, little key reversal signal, that was a bearish engulfing as well as key reversal day on November the 10th. Price went ahead and moved lower out here. Now as we take this back into our current pattern, you know, if natural gas today closes, so it opened up here, March contract open at $3.08, just above that level. The the open of the trading session from December 26 was $3.12. So if you close at $3.12 today, you actually will have a bull sash type candle. Ideally, you'd like to see it close above the high from Friday, and that would be $3.13. If you see that, you would actually have a bullish reversal signal near the completion of an A to B equals CD to the downside. Now, the question is it a short bounce before going lower? I don't really know the answer to that. You're asking me to be Johnny Carson, a soothsayer, Karnak. Put that little envelope up to my head. What I can tell you, now you would place a trade out here, is if you do see a bullish reversal signal today, because we're so close to an A to B equals CD to the downside, then what you ought to at least get is a dead cat bounce, a 0.382 retracement of that entire move. That would take it about $3.59 out there. Likewise, if we don't get a bullish reversal signal today, what does that say? It says that the low may not be in. And that says that, okay, so your price target becomes your 1-to-1, at least your 1-to-1, which is 292. If you don't see a bullish reversal signal as price is moving down through that, what's your next level that you would move towards at least? That would be $2.66 out there. If we take a look at potential butterfly patterns out here. Let me see what those might look like. I would take a look at the swing point low out here on October 28th to the high rate out here on November 21st. So right now, we're trading right at about a 1.618 butterfly pattern. So today, if you were to see a reversal candle, I gave you what those parameters are, you'd have a to B equals CD to the downside that has been confirmed to buy the D point. You'd have a 1.618 butterfly because we've taken a look at the expansion of its last set of swing points out there, and that's the pattern that you would have in play. If those fail, then we've got the identification of where prices are moving to. Now, what we can also identify out here on the chart, and the reason why, and it's a great question, is it's just simply a short-term bounce. At this stage, price has gotten into the extreme oversold condition. It did that on Friday. So what we could be seeing, that's when we take a look at our relative strength weakness reading out here, got down to about 28.12. Anything below 30 says you start to get into a oversold condition. Unfortunately, it was moving lower with conviction as it moved down there. So pretty good chance this is just a short-term bounce. But we've got the parameters to look at, to identify. We really won't know until tomorrow sometime. But there's the potential that it's giving us a butterfly buy, a buy of the D point, but we won't know till the day closes. So I hope that helps whoever it is that sent me that email, because there is no name associated with it. If we go take a look at Goldilocks out here, gold's trading back a couple of bucks. I guess we'll have to do that when we get back from the break. So we get back to the break. Let's go see how these markets are going to pop. Actually, they're going to drop just a tad, and then we'll see if they're going to pop. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization information capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 18 points, straight out to 18,035. S&P is down about 75 cents. No big deal. Trading out at 2,088. Composite is flat, trading at 48.05. Russell 2,000 flat, up 97 cents. Trading out at 12.16. Gold back $4. Silver off 9 pennies. Before we went to that break, I mentioned gold, so let's go take a look at gold out here. What we can see that gold has done, had a nice price day on Friday, no question about it. Of course, there was really nobody at the switch. Most people not trading, just like that'll be the case this coming Friday as well. and for most of this week out here. So what we know about gold is the following. Number one, a nice price move on Friday, but ran right into resistance. That little descending price trend line, that's off of the August 14th high as your touch point, using the October 21st level as your touch point out here. So just simply running into resistance. You've also got the resistance of your TAS market profile. That's your 1198 area. So, ideally you'd see gold pull back into about the 1152 range out there, the bottom of the TAS box. That's one possible pattern. Another pattern out here is an A to B equals CD to the downside. That A to B equals CD to the downside, that would set up your Tiger Gartley buy pattern. Your A point is out here at the high on December 10th. Your B point is out here. Your low on December 17th. Your C point happens to be the top of December 18th. 1-to-1 A to B equals CD gets in at 1157. So 1157, 1152, which is the TAS box out there. That becomes the ideal potential trade setup out there. You'd like to see a bullish reversal signal. And ideally, folks, you will see that on December 31st. Today's December 29th. So 2 days from now. Here's the trade. Here's the trade of the, it's not the trade of the year. It's the trade of the end of the year, though. That's for sure. If we can see gold get down there, and I'd even be willing to venture to take that long trade out there without seeing a bullish reversal signal. Now, no reason to not necessarily wait till Friday, but if that is the gift that we get out there, that could be the gift to fire away when nobody really is looking at the switch out there. So we'll just have to see. Now, on the other hand, does gold have to go down there? No. But and what you'd want to see for an upside move inside gold, you want to see it really take out that longer-term trend line out here. That's the white diagonal line going across my screen. Where's that priced at? I don't know. Today, it'd probably be about 12.26, somewhere right around that range. We look at silver. Silver right now is trading back 10 cents. She's trading out at 16.04. Silver is stronger than gold from the standpoint that silver has, really has just one trend line to truly focus on, and it's above that area. But silver, high-ho silver, is not going to go anywhere without Goldilocks. So at this stage here, I would be focused on gold. If you want to trade silver, wait till you get the reversal signal on gold, and then go ahead and pull the trigger on silver, if you'd like. Light sweet crude, that's trading up 40 cents out here right now. Again, whoops, didn't mean to do that. No, I meant to just, the heck. That's all I meant to do was to go ahead and expand the chart out here. So as I mentioned, prices continue to go. The first possible time that prices, when they're going lower, can turn out there is when you see some type of bullish reversal signal. Doesn't mean that it's going to, but it's like the first possible time period when it actually could out here. In the case of light sweet crude, we've had a couple of them. You had a little bull. This was the biggest bullish reversal signal right here. No bull. That was on December the 19th. Now, that was a bull sash candle out here, but the very next day, it just it gave it back. There was no follow-through to the upside out there, and so what it did was it really degraded that signal. Nonetheless, it does say that support inside of light sweet crude is really going to be the low of December 18th. So 54.28 is the number to be watching. If we see it close below 54.28, that's not even the swing point. The swing point low is December 16th. That's at 53.94, but I'm going to use support as the low of the two trading sessions, which would be the December 18th or the December 19th bull sash candle. So it's going to be the low from December 18th. The close below that, and that is what is our signal that takes light sweet crude back to, what is it, like $50? I'll give you that exact number out here. I'll put the continuous contract, and we'll put we don't have to put the quarterly chart on my screen. We've already got it identified for us. That price point, the next price point is $50.67. That's what you would be looking for. Now, if price gets down to, does that mean it's a buy? No. That just means that would be the next floor level of where you should find some type of support out there. So that's what's going on inside the light sweet crude complex. Let's go take a look at some equities here that are moving and grooving inside the marketplace. I'm sorry, folks. I'm a bit under the weather here, so it's a little bit of a struggle. John Logan's going to go ahead and fill in during that second hour for me, so I appreciate John doing that. I see got an email here. Let me do a couple stocks moving and grooving, and then we'll get to Carl, who wants to take a look at XLK. Let's look at what's moving to the upside out here. We've got Gilead Sciences up $3 right now, so let's go see what we can find out about Gilead. Gilead made a perfect A to B equals CD to the downside. That price objective was $86. Even Steven, it got down to $85.95. You got to love that. Now what we're seeing here in the case of Gilead, it's really got a supply line issue that it's dealing with. There was a bunch of selling that took place on December 22nd. That was wide price spread. That was accelerated volume. In Gilead is just getting back to that level of 98.07. If it can close above 98.07, maybe what Gilead does is goes and it closes the window. It repairs the window. That gap down that it would need to get into and close above is going to be 104.64 in order to heal itself out there. And that is what's going on inside of that equity. We look at Juno Therapeutics. Again, a nice move today for 4% to the upside out here. That's after having this is a daily chart. So this is a IPO from just a few days ago, December 19th. Not a whole lot of information out here, so no reason for us to hang out there. Manitowoc, that is not an IPO. MTW is the ticker symbol. That's gapping up this morning, $9. So this thing is, let's pull this back, see what this is doing out here. So you got volume of 1.5 million shares for this equity, not too bad. Now this is actually getting into, so here we do actually see a change in trend that is taking place. What I mean by that is Manitowoc had a big move to the downside on October 9th, 2.4 million shares. I apologize. It was more like 13.8 million shares out there. But and you can see I'll put the resistance line on my chart. You can see how that acted as resistance. Hey, it's gapped up above that level here today, so it's repaired that window, and it looks like it's back off to the races now. It's got another issue that it's got to contend with. That's all the way. So this thing has been gapping down. Did not make a 3-gap play, but its previous gap prior to this one, that was at the price point of about $29.43 out here. So it would look like to me that this is trading at $22.81, $29.43 is a game for its next target out there. That is ticker symbol MTW. Okay, let me turn over here. Carl says, I was looking to go along with the XLK and was hoping you may have time to take a look during the show. There clears large uptrend already in place, but I don't want to hop in at the top. Okay, well, let's go look at XLK. For Carl, let's go see what information we can pull out here. Is it just hot in here, or is it me? Oh, it must be a little not good. Let me see here. Workspace. Let me do this. And let me switch over to futures. Okay, I'm just going to switch over. So I'm going to take a look at the XLK, which is down 12 cents as we speak right now. So let's go take a look at a number of different things out here. So as we take a look at the XLK, what the XLK is doing, Carl, is the first thing that my eyes are going to focus on is going. Let me just remove. Yeah, let me remove just a couple of things out here. Okay, so the first thing that we're going to focus on is this swing point from November 28th. Remember when we took a look at the NQ, the QQQ ETF out here, we were looking at how it has not been able to overtake its November 28th level. Now, the swing point here, November 28th, correct me if I'm wrong, I believe that was a shortened trading session. Was that when we came back from Thanksgiving out there? I think it was. So that had 5.4 million shares. So that's really not the volume benchmark that we need to use. I don't know what it is. I think the market was open till 1 o'clock. Do you take, divide it by 3.5 times 6.5? You just multiply it times 2. How do you account for the fact that they're light trading session? I just say just make it easy. Let's multiply it times 2, 10.8 million shares. Now, as prices moved up into that level, now we're dealing with what? We're dealing with Christmas Eve, the day after Christmas. So let's go back just a tad. Let's go back to December 23rd, December 22nd. Only 6 million shares really moving into that the XLK up here on November 28th. They only had 5.4 million shares. So what you don't want to do, Carl, is you don't want to hop in at the top. Volume-wise, if we just simply use the swing point, that this would be saying that you would be hopping in at the top because you're not coming into that swing point with volume. Now, because this is a potential for a large A to B equals C to the upside, just as we took a look at, let's do this here. We did this in the NQ. We'll do this with the XLK. You can see that it's made just slightly more than a 0.382 retracement from low to high out there. So what that says is that if, in fact, the XLK is able to take on that November 28th swing point, do it with conviction, do it with volume, what that could be setting up for you is a large A to B equals C to the upside. Now, oops, let me do this here. We don't have that piece of information right now, but we can plan ahead, right? We can try to identify what could be going on out here. Then you can do some reward risks out here. If it does take over that 42.58, does it with volume, that says 45.83 to 47.46 would become your target line out here. So, the XLK, now let's go put the TAS boxes on a pullback. What would you be looking for? This would be a great tool to try to identify, where price could be pulling back to. Inside the XLK, it's up above the top of the box, resistance, 41.88. If you see price get below 41.88, pretty good chance it runs down to 40.51, maybe 40.06. That might be your buy point, out here. So the XLK not providing us with any kind of surefire signal, even in this lightened trading environment here, that it is that this would be the place to focus on. There's stronger areas in the market. What's a stronger area? Let's go take a look. I'm glad you asked me that. A stronger area is going to be the Russell 2000, right? Let's go take a look at the Russell 2000. So what does Stevie mean by that? Okay, let's pull the Russell 2000 back here. And let me go ahead and turn a couple of things off. Let's turn that off. Let's turn that off. Let's turn that off. Okay, so we're pretty much home free here. Now, we're going to show you inside the Russell 2000, Carl. And I'm only speaking to Carl now. So if we take a look at this, Carl, one of the things we're going to take a look at is this huge consolidation pattern that is inside the Russell 2000. So the bottom of the consolidation level is basically at about the 1038 area. So 1038 is the bottom. The top of the consolidation, Carl, is at 1212. So, do the math on that. 1037 to 1212, what do we got? About 160, 70 points out there. So you can add to 1212 about 160 points. Now, why is that important? That's important because we may, inside the Russell 2000, have a consolidation break to the upside. And when you break through a consolidation pattern, the move is usually equal to or greater than the consolidation. Now, Friday, light trading session, how do we evaluate Friday, today, tomorrow, Wednesday, this following Friday? The best way to actually play this is whenever you break through a level of resistance, what you like to see is and it doesn't matter whether it's horizontal or diagonal, doesn't have to, excuse me, but what you'd like to see it do is come back and test that area. So the tests are either the high of July 1st, which is at about 1213.55, or the 1212.82 level. You'd really like to see price pull back, test that level, and then break out from there. So that's really what you should. I would say that you're better off looking at the IWM. TNA is the triple. I think TWM, somebody that can correct me if I'm wrong, TWM might be the 200% ETF. I would say your better place to look for a trade is really going to be inside of that. Now, let's go take a look at volume characteristics by going back and looking at the IWM. So we look at the IWM, that's up 76 cents as we speak right now. And the IWM, there's a couple different patterns, but let's try to stick with the same pattern out here. That same pattern now being the March 4th swing point high and the July 1st swing point high. So what do we know about those two swing points? Those, by the way, are at 120.58 and 120.97. March 4th, the volume was a good question. Let me put the volume on my screen out here. That's going to make it a little bit easier for me to tell you. Okay, so volume was 112 million shares. And as we got through that on Friday, you came into it with 18 million shares. 18 million versus 112 million. You had on July 1st, you had 65 million, again, versus 18 million or so on Friday. Today, so far, you've done 4 million shares. So at least today, you've got better volume than we had on Friday. Nonetheless, Carl, I believe that your best bet versus the XLK, and I could be wrong here, is to take a look at the IWM. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's up 14, S&P is up 3, Composites up 2. The TWM was the two-time short ETF out there, so I believe it's the UWM. But there's another ETF that's better than this one. This doesn't have much in the way. There should be for a 200%er. This liquidity here is somewhat disgusting. 500,000 shares, 300,000 shares. Of course, I don't even know. What's the TWM? Let me see what that one actually trades at. Maybe that's just normal for these two ETFs out here. No. There's millions of shares inside the other one. In any event, that was taking a look for Carl at the XLK, and I just simply came up with something I think is better to look at. I also see another email in here asking about Great Panther Silver GPL. Is the ticker symbol there, and the question is, will it test a low of 55 cents, or can you see it slicing through that? Let's go see what this listener viewer is looking at the 55-cent level. First, let's just start with the long term. We're about to end the month of December out here, and the key swing point inside of Great Panther on a monthly basis, that is the trading session of October the 1st. The high is 65 cents, the low is 14 cents out there. If you close below 65 cents, that says you can go test the low of that swing point. So the number you're looking at inside Great Panther is if it closes the month of December out below 65 cents, says 14 pennies is where that thing could head to. Now, if I switch back to the daily chart, I will assume, but we're going to find out, that the 55 cents is coming from a most recent low out here. The most recent low would have been, from December 23rd. That's your 55-cent level. Volume on that day was 1.6 million shares. You're trading into it today with 112,000 shares out there. No real bullish reversal signals of importance. I would just pay attention to that 65-cent level. That's a level you either want to see it clear and get above, and if it doesn't, says forget it. 55 cents is not just game. 14 pennies is a game out there as well. Now, kind of something of interest here right now, just kind of watch this for the day. My opinion is we see that the VIX index here is trading out at 1542. Excuse me. 1554 is the 50-day exponential moving average. You're at 1543 right now. If the VIX today closes above 1554, that's the 50-day exponential moving average. That's not a good scene. Anytime the VIX closes above the 50-day exponential moving average, that's where some real carnage can take place inside of the marketplace out here. So watch that. That's something to watch. Now, I mentioned the Dow earlier, and some potential problems. Here's one of them. Just depends on how the day. What we've seen here is I'm looking at, if you're watching this on Tiger TV, I'm looking at the summation index and the price oscillator. Price oscillator specifically on the bottom of the chart here. And it's starting to make, this is the Dow now, it's only the Dow that I'm noticing this pattern. It's starting to make just a slightly lower highs out here. And it's been making, from that point, it's been making slightly higher highs in price. And when it does that, you've got a divergent pattern. That's always another cautionary sign inside of the market out there. So, folks, stay tuned. Our man John Logan is going to be kind enough to fill in for me for hour 2, and I appreciate that very much, John. And stay tuned for the rest of the day. Hopefully you had a great weekend out there, and hopefully I'll be with you tomorrow morning. Have a great Monday. Look forward to seeing you soon.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.